If I told you that one tiny company could be about to change the energy industry forever and that it's trading for just $1, would you be intrigued? This little-known Aussie company says it's found a way to transform fossil fuels into clean energy. Think about that for a second. That's huge. Currently, this company is so small that hardly anyone knows about it, which is why its stock is still so cheap. And that means there's the potential for incredible returns if and when this company's tech goes mainstream. This clean energy breakthrough stock is just one of 7 promising Aussie companies on our radar at the moment. To get the full details on all of them, click the link below now.
Hi there, welcome to the closing bell on the 23rd of October. Thank God I've been allowed out of the house. I can go and get a haircut now. So last day where I'll have my buffy haircut. And really what happened last week, not much in Stockland. It was pretty dull, but there's a few things going on. I wrote that article about the bonds and how they're placed. We had the yield curve in the US flattening after the high inflation figures and the Fed coming out saying that taper's on the way. But that has been reversed. I thought it was a bit weird, the fact that the 10-year bonds rallied after that news. Very strange indeed. But this week, we've seen things really turn around. Those bonds are under pressure, and where they are set up in the big picture is looking pretty scary to me as far as expecting rates could really spike. So I just wanted to quickly take you through the charts on that. That's obviously related to gold and what's going on there. And then finish off with a recap of a few of the stocks that I've been giving you recently. And some of them looking like they're setting up quite nicely for a good signal pretty soon. So let's have a quick look at the 10-year US bonds. And this is a chart of the yield. So you've got to know that when this chart is going down, it's saying yields are going down, but the price goes in the opposite direction to the yield. So when this chart is going down, it's actually saying the price of those bonds is going up. And when the yield's going up, the price of the bonds is going down. So it's sort of flipped around. That's the way you've got to think about it. I just like looking at the yield chart when I'm looking at bonds. And what I was saying in the article, and even if you didn't read it, just to recap on how I look at these things, we have this range set up. Back in 2012 to 2014, rates rallied from 1.3% to about 3% in that time. And really, I see all of the price action since as related to that initial range. Even that huge fall in yields that we saw during the COVID crash. And the key areas outside of range that are really important is that Fibonacci level, 618, outside the range. That is where you can often see a reversal, and then prices can head back to the point of control. And really, the simple theory on this is a lot of people are trading in this area, and often the longs and the shorts, they're going to have their stop losses at the extremity, outside the extremity of the range. So often prices will go down and sort of test the lower bound, stop quite a few people out. And then if that's it, then prices often reverse and will head back to that point of control. And you see it a couple of times here, prices breaking out to the upside, or sorry, yields breaking out to the upside. That's my mistake. Looking like yields are going to take off there. And all of a sudden the music stopped, reversal, monthly sell pivot, and then crashed straight back to that midpoint, the point of control, which is around 2.2% in those bonds. And I'm just really following that along. And we had the crash in yields down to 0.3. And this interesting move, from 0.3 to 1.8% over the last year. And really, this has just been a small correction, and it's taking off again. And we're really close to that 1.8% region. We've got taper coming next month. We've got large fiscal stimulus coming. They're probably going to issue lots of bonds. So there's a lot of things pointing to yields probably rising, and especially with inflation really not that under control at the moment, even though a lot of it could be short term, but there's still lots of signs that things could really pick up. So just looking at this, you just want to be wary if the rates start heading above 1.8%. The long-term trend's shifted, that 10-month exponential above that 20-month simple. And this is just one of those things that I look out for. Once you get that shift in trend, I'll often see a reversal and a retest of those longer-term moving averages. And if that holds and things turn up, often that is the beginning of quite a move. That often works in stocks if you're looking at things like that. So from that point of view, there's just a lot of boxes getting ticked here, saying that things are turning up in yields. We got the monthly buy pivot on those yields last month. And yeah, since that meeting, it looked like they were rallying, but now they're selling off quite sharply. So seeing how this performs over the next few weeks is going to be interesting. And really, if it breaks above there, I can create targets, again, back to that point of control around 2.2%. So you've got to be thinking about your portfolio based on if that happens, if we see a sharp move in that direction, you know, what effect could it have? Tech stocks may come under a bit of pressure. And gold stocks as well. I got quite excited about gold last week on the basis of the flattening of the yield curve, but I'm a little bit more skeptical, even though gold has held in there quite well. So I just wanted to quickly show you the situation in gold, where I think I'm sort of confident, slightly confident that they can pick up and rally, but I'm a little wary. I guess that would be my view. And so the way I'm looking at gold at the moment is really analysing this whole correction over the last year. That's where all the market positioning is. So we're looking at that range. We've got the point of control of that range around 1875. So if things do start rallying, that's really a target for me in the short term around there. And you can see there has been a bit of buying pressure coming in around the buy zone area. And we've had multiple attempts at a rally from this zone, and the selling pressure is still around. So, you know, it really is a difficult situation in gold. But last week, we did actually get the weekly buy pivot confirmed, even though we got the very weak day on Friday, which sold it off to the lows again. But the weekly buy pivot was confirmed, and that's from the buy zone area of that whole range for the last few years. And you can see this afternoon trading around 1786. It's sort of set up to catapult if it can head above $18. Sorry, 1,800 bucks. There is a chance that we could see a bit of a run, and especially if it can head above that sort of 1830 region. You know, you've just got a few dominoes, I guess, lined up, which could set off a bit of a chain reaction up towards that 1875 region. So that's really what I'm banking on at the moment. But it all is based on those bonds not going completely crazy. And that's what I guess I'm a bit fearful of. Gold really hasn't proven that it's trending back to the upside yet. We've still got the corrective phase actually live. We haven't taken out the lowest high in that downtrend. But by then, you know, gold's going to be really close to the all-time highs, and the gold stocks will have already probably taken off. So you're probably being a bit late if you're waiting for that confirmation. So for me, I think gold is looking okay, but beware of those bonds and just keep a bit of an eye on them and see how gold reacts as those bonds continue to sell off. So moving on to a couple of the stocks that I've been chatting about lately, I like to do a bit of a follow-up rather than just throwing it out there and then never mentioning it again. We talked about Vintage Energy a couple of weeks ago. They were having a good run at the time. and I said, look, they're a bit hot right now, but around that 8-9 cent region, I was saying they're probably going to look okay. I'll actually go in nice and close since we're talking about the recent price action. And it was around here we were having a chat, and I was saying, yeah, around 8-9 cents is going to be the spot where you could probably start having a look at this. And the next few days it sold off down to about 8.4 cents and has blasted off to the upside. So sitting around 10.5 cents at the moment. I'm not a buyer at 10.5 cents. I just think it's already had a pretty good run. I'd more be looking to take a bit of money up here, set yourself up into a nice free option by selling a third or a half of the position. And, if you did that, let's say you bought it in at 8.5 cents, currently at 10.5 cents. Well, if I sold half of my position, I've got a break-even stop loss level down at 6.5 cents. So the stock could, collapse down to 6.5 cents, and you'd walk away break even from the trade. I think that's the way you've got to approach these little piddlers, because they can be extremely volatile. And I also mentioned Blue Energy, and I just think it's interesting. There's a bit of volume coming into this today. They had a capital raising, and that can often cause problems for a stock. So this is Blue Energy going back just for the last couple of years. And, this stock, obviously, a huge amount of gas they own, but it's stranded, and they need some pipelines developed to open up their gas fields. So if that happens, this thing's worth many multiples of where they are currently at. But there's always delays. It takes time. Nothing's signed, sealed and delivered yet. But with the crisis taking off, you'd think the odds are increasing slowly that it will eventually happen. And they had their capital raising back here just a month or two ago. And you can see it's just been struggling a bit since then. And even with the crisis happening, it really hasn't been able to lift its head. But today, there's just nice volume coming to the stock, trading above 6 cents. So that one is looking interesting to keep tabs on. But for me, I'm really looking at the monthly on this with that monthly trend turned up. And we're sort of back to support levels here at that 20-month moving average. So, monthly close above the high of that candle, that will create the monthly buy pivot. And I'd be starting to get pretty interested in having a look at that one. So that's above 6.3 cents, which was the high today. So a monthly close, end of this month above 6.3 cents. It's definitely one that you'd start picking up a few, even though it's going to take time. It's really got to be a bottom draw investment, that one. You can't expect it to make you money overnight. But tell you what, if it does get going, it's going to look fabulous. And I also had a look at Investigator Resources for you. That's had a pretty nice week this week. I think it was down, around 1, 2, 3, 4, 5. Oh, it was up around 7 cents. And, it's taken off to a high of the mid sevens this week. So it has seen more buying come in. And really on the monthly is waiting for signs that this one can take off. I probably need a monthly close above 7.3 cents. And then that one probably will start to kick higher. And I also had a look at ADN. If that one can hold in here around this level to the end of this month, that will start setting off a few things for me. And I'd be, I guess a buyer on retracements, expecting that it will continue to the upside. Look, if it cracked back below 10 cents, then I'd be probably running away from it with my hands in the air. So that one is still looking pretty interesting after this week's trading. So I reckon that's probably enough for this week for you. No additions, but definitely keep an eye on that blue energy as we head towards the end of the month. And yeah, definitely keep an eye on those bonds and gold. I think it could get a bit interesting from here. So that's it. Check out the links below the video to find out what I'm up to. And if you want some trades from me, you've just got to join the service. And I'd love to have you as a member. Hopefully I can pick you a few winners over the next few months and convince you that it's definitely worth joining. All right, well, I will come back with more next week. Cheers.